Day today, and it's time to get one of the biggest market voices out there. Amisha Vora, joint MD at Prabhudas Lilladher, joins in on the show. Amisha, let me first take this opportunity to wish you a happy Women's Day from everyone here at Business Television India. You know, before we talk about the markets, just
thank you so much.
Talk to us about your journey in the markets, what your experience has been working in the financial services industry. When you started out, what was the kind of women participation that was there in this industry, and how have you seen things evolve over the years?
So definitely from when I started to now, if I compare in my own organization, be it in institutional sales, be it in research, be it in operations, risk or settlement, the number of women has increased substantially. And you will be happy to note that my company's DMAT department, so the actual onboarding of clients as well as depository department is headed by a woman. My company's customer connect department is headed by a woman, and across research also, as what I said, we have many women, and one of the small segment of research, as we called idea research, is headed by a woman. So I think there is a long way in which even the financial sector has given opportunities to women, because there are two things here. Financial sector has no time constraint or no time restrictions. So you have to work 24/7 by 365 is the rule in the financial sector. So women have also taken up the challenge. At the same time, I would definitely say both the organizations, clients, and above all the family members have kept a very open mind. That's how everything is now looking much different.
And do you see this only changing for the better as we go forward?
I definitely feel it's changing for the better. I was recently for a award ceremony at one of the very prestigious college, and you won't believe, across every standard and across every professional exam, number one, a girl, number two, a girl, number three, a girl. So, their commitment, their dedication, their desire is so strong to move ahead in life. So, I'm very sure that, women participation will continue to increase.
All right, women participation is only going to continue to increase. Let me then talk about markets with you, Amisha. We've seen a very polarized market recently. There was a lot of distribution that was going on. There were only a key large caps that held the markets together and continue to do so at the moment. But in the last 2 weeks or so, FI buying has stepped up in a significant manner, and broader end of the market is suddenly making a comeback. Just decode the market trend as you observe it right now, and how do you see markets panning out going forward from here?
So if you see, apart from last 2 weeks, before that also, the flows from developed world to emerging markets as a basket had started, and some of the markets other than India, had started performing year to date very well. And India, because of its own some of the issues that we face, starting with NBFC, of course, state election outcome, and the most important being the geopolitical tension, we were underperforming. The moment we got little clarity on that, I think we are just bouncing, and we are trying to catch up with what's been happening globally to the emerging market as a basket, and within that, as what the inflation outlook which is benign, the interest rate outlook which is becoming a little soft than before, and the kind of undervaluation or underperformance, I wouldn't still say undervaluation, but underperformance which has happened to mid-cap, the broader market has started participating, and which is a very good sign, I would say.
Do you see this momentum continue going forward? Would there be any sectors or any stocks in specific that you would be looking at from the broader end of the markets?
So I feel, this year markets, as what I've been telling from the beginning of the year, that markets would be with all the challenges, and maybe challenges higher than last year, would still be constructive, and the wealth destruction which happened last year across the board, that kind of wealth destruction we may not see, and in my opinion, we will not see. Having said that, the whole climb will also be very gradual. 2 steps, 3 steps we take forward and we will feel as if we are tired as a market as a whole, I am saying, and then we might push back a bit and then go ahead. So the journey will be gradual. I don't see a very perpendicular straight journey up, but it will be a very constructive market. And within coming to sectors, I think the broad theme this year will continue to be corporate facing bank coming out of their deep trouble in last 4 to 5 years and bouncing back. So the theme which was last 5 years, say NBFC, from all the corporate facing bank, I think to some extent that theme will reverse. I feel engineering side, light as well as heavy, will come back to some extent. In terms of deep value, I think in some of the auto ancillaries across the segment, because of little slowdown in the OEM market, but I think the correction in the valuation of the auto ancillary has been huge. So that I think will offer a very good opportunity. Some pockets are still continuing to be unresolved despite I think having known that this is a pocket to be resolved, one of them being the real estate and its multiplier impact on the entire vendor supplies. I think that is not yet showing signs of coming out, and so the relevant stocks will still face little challenges, but otherwise I think that gradually things will start participating. If I have to particularly talk about a stock, I feel that in terms of risk return and a growth from a 2 to 5 years perspective, BHEL offers an excellent opportunity for investment.
All right, so a couple of names there that Amisha is mentioning for us as well. Amisha, you spoke about the auto space. You know, if you look at the latest SIAM data, that doesn't point a very rosy picture for the space. Total passenger car sales are down about 4% on a YOY basis. Two-wheeler sales are also down about 4% on a YOY basis. Exports have gone up to the same amount. CV sales are just about flat at the moment. Even LCV sales and MHCV sales have nothing significant to show. What I'm trying to understand is the industry is in a flux. We know BS6 transition is coming. Rural economy has been in the doldrums and that's affected two-wheeler sales, and passenger car sales have been muted for the last few months. Dealer inventories are at a decade high. Discounting is at a high at the moment. I mean, how do you see the industry transitioning out of this or coming out of this lull, as it were? And do you think the worst has been factored into the pricing at the stocks right now, or there could be some more pain ahead?
So I think if we talk about auto as such, of course the pain has been evident for last 3-4 months, and I think for pain to go also, or the slowdown to go also, will take at least couple of quarters, if not more. So until the time you start seeing that coming into numbers, I don't think stocks will outperform the Nifty. If they will participate with Nifty, that's a possibility. But outperformance looks difficult to me. I was rather talking about a few auto ancillaries selectively, which have, you know, because of both a slowdown in auto, but also because of the mid-cap, small-cap fall, have fallen 50, 60, 70% from the top. Some of them are zero debt companies with some foreign collaboration. So that will be the time to look at it from an investment perspective. But I do agree that the auto slowdown is there and it may continue for a while. I think good bit of adjustment will be required, and one needs to really see how this buying versus renting phenomena is going to really unfold in the passenger vehicle segment over not 3 months, 6 months, but over a couple of years, to see when and how the demand is usually coming back.
All right. Give us a sense, you spoke of heavy engineering or capital goods as one of the spaces that you like, and BHEL, I think, is a stock that you mentioned. Do you also have views on names like BEL or BEML? Suddenly there's a lot of interest that's come into both of these stocks. Thermax, ABB India have been, talking of order wins coming in. L&T was one of the top gainers recently on the back of some key orders that they had added. Is this going to be a push, or is this going to be a space that we should watch out for in the coming years?
I certainly feel that, this space has been in a kind of a low action mode for almost a decade, and for sure 8 years. So I think that it's good long time which has passed when India largely government spending, but a few corporate spending from sectors like say steel, cement to start with, and as we know, whether it is graphites, whether it is chemicals, everywhere because of some China factor, the profitability has gone up. So I feel that on a very broader basis, the capex had been extremely low in the economy in the past. At the same time, these companies were also reflecting those very low turnovers, profitabilities, and as what a little pickup comes, the economies of scale in some of these companies will start flowing into EBITDA and PAT more than the top line. So I am very optimistic about this segment for sure.
Point taken. Let me ask you of a very small sector of the market, but it's seen a lot of action of late, both in terms of stock movement and more importantly in policy decisions. The entire sugar space, I mean, month on month, more and more incentives have come for this. We were talking to an industry representative earlier today, and he said the recent initiatives will go a long way, both in terms of additional utilization of excess sugar production as well as clearing of arrears, which is always a very sensitive issue, and clearing of their debt as well. Do you share that optimism in sugar, or do you think it's more of a trading play, and considering the political movement and the impact it has on the space, it's something that investors should stay away from?
No, I don't think this is something which you should stay away from. If we see from a broader perspective, the kind of steps and agility with which the government is taking steps which are so strategic, I think, for years and years this industry was ignored, and now a framework is probably coming into place both by way of ethanol, by way of minimum economic price, and by way of this loan which is at concessional rate. The whole industry, it looks, can come out of that very uncertain, fragile time, and over the next 2 to 5 years maybe, whatever may be the situation in terms of crop and pricing, a little bit of sanity will prevail, I feel, because of the kind of balance which is created in terms of their, alternative avenues of revenue. So I feel this is an industry which should not be ignored. Of course, at the end of the day, like steel, cement, sugar is also a commodity. One has to play cycles. But right now, probably we are in the midst of a cycle. We are not at the peak of the cycle. So one can still ride it.
Alright, we are in the midst of the cycle, not at the peak of cycle. Another interesting space, and something that's seen a lot of action and continues to see a lot of action, gas distribution or city gas distribution. You've had established names like IGL and MGL. You've had more names that are planning to make a foray into this space. I mean, Adani is betting big on gas distribution right now. Would you continue to look at this as an attractive investment avenue as gas distribution grows to other cities? There's been a round of bidding that's attracted a lot of interest as well.
I would think so. This is definitely very good space, and within that also IGL and MGL both are good plays. MGL has also corrected from its peak, and it's a very reasonably steady play, and IGL has been, of course, doing well. So I think this is a good space for long-term investors, despite having outperformance for last, I think, 2 to 3 years or maybe more by both these stocks, particularly IGL. I still feel it offers a very good business proposition and very good investment opportunity.
Any views on the consumption universe? I mean, valuations always continue to be a concern here, but we are going into elections, we are going into several stimulus packages that have been announced for the rural economy. If consumption does again come to the fore, would there be any specific areas that you would look at?
So we continue to remain bullish on Jubilant Food, and that is consumption play, but more to do with the strategies and implementation by the new management. So that is where one stock we are very bullish on. We continue to like on a medium term basis Titan a lot. It's a proven story, but I think it's still got a lot of steam for a very long time to come. We like Trent a lot. Not a core consumption play, but yes, it's a consumption play only. Future retail also is a place which we like. And I think that apart from some of the places where valuations are very high, but consumption is a place for 6 months or 1 year will go a bit in out of favor because of the valuations, and there will be value plays which will catch up. But on a broader theme basis, I would still think that this place will continue to be a big part of the portfolio whenever any India investments has to be looked at.
Point taken, Amisha. Thanks so much for joining in today, and let me once again wish you and everyone else at Prabhudas Lilladher a happy Women's Day. Thanks so much for joining today and sharing your perspective on the markets with us. That's the view from Amisha Vora, but on that note, completely out of time. Thanks so much for watching. Up next, it's time for Call BTVI.